Polygon Matic continues to hold above our key area of support between the 0.5505 and the 0.5293. At the time of this recording, we are also attempting a break above the 20-day MA here on the 1-hour chart to flip it back into support. We have also continued to obey the Deriv structures, where I believe that we have peaked in the formation of this wave 1, seen a pullback in the formation of this wave 2, and in the next coming hours, there are high chances that we can easily see another bounce to the upside in an Deriv count 3. And on today's update video, I will be giving you the minimum breakout target areas for that wave 3, and also give you the most significant key areas of supports that you need to continue holding above. So make sure that you stick around till the end of the video. And starting the video by first explaining this Deriv structure that I have here on the charts in red, which started to play out from the lows that we made on the 26th of November. You can all see that we first peaked in the formation of this wave 1. We saw a bit of a pullback yesterday in the formation of this wave 2 into the minimum target areas for that second wave, highlighted on the charts using that blue target area, an area that I came up with by connecting the fibs from the low of the first wave to the high of that wave 1, where you can see that the target area lies between the fib level 0.382 and the fib level 0.618, and that is an area that is now giving us a bit of a reaction to the upside, though we didn't quite fully maximize the target area. And that means that there are high chances that we could either have a low in place, or maybe later today we might see another pullback into the area, fully maximizing the target area. And having in mind that we could have a low in place for the second wave, there is a chance that we can easily see a bounce in the next coming hours in the formation of these Deriv count 3, whose minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of the wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area for the third wave at the fib level 1.618, and that is above the 0.6914, an area that we can easily maximize in the next coming hours. And for that to play out, and to also get a confirmation that we are now starting that impulsive Deriv count 3, we need to see a bounce giving us a break above the high that we made in the formation of this wave 1, above the 0.5851. The moment that plays out, then we can expect a massive surge in the next coming hours, getting us back above the 0.69 in the next coming hours. Then from that point, we can expect a pullback in a wave 4, and then continue pushing even higher in an Deriv count 5. We also need to have in mind that we can also get rejected and continue seeing further pullbacks in the next coming hours, and that will be suggesting that we still don't have a low in place for the second wave, and whatever is playing out over here is an ABC corrective structure, where we can term these as a wave A. Then the bounce over here is a bounce in a wave B, and we can expect one more new low in a wave C, fully maximizing our blue target area. And once we have one more new low for the second wave, we can expect our aggressive bounce to the upside in the formation of this wave 3. And if that is the case, then we need to pay attention to the area between the 0.5505 and the 0.5293. We also need to have in mind that this Deriv structure that I have here on the charts in red is part of a micro Deriv structure within the formation of an even larger Deriv count 5 that is better seen on this chart, where you can see that I have this Deriv structure in blue, which started to play out from the lows that we made on the 4th of November, and we first peaked in the formation of this wave 1. Then we saw a pullback in a wave 2, another bounce to the upside in a wave 3. Then we saw a corrective structure over here in the formation of the wave 4 into the minimum pullback target areas for the fourth wave, highlighted on the charts using this yellow target area. And there are high chances that we have a low in place for that wave 4, and whatever is playing out at the moment is the start of an impulsive Deriv count 5, whose minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of the wave 1, then dragging the fibs to the high of the wave 3, giving me a minimum target area for that with 5 at the fib level 0.618, and that is above the $0.723, an area that we can fully maximize in the next coming hours. So that is the price action that I'm expecting here on the Polygon Matic chart on the short term and also on the long term. And let's be patient and see how that plays out, and I will be keeping you up to date.